Hello, hello, welcome aboard. Walter here, and we're going to talk about naked trading right now. And I want to remind you that if you'd like to go to the free on-demand class, it's at nakedtradingclass.com, and you will see there how to grow an account quickly. So let's talk about some of the methods you can use to find really cool trades. This stuff didn't make it into the book Naked Forex, but I'm going to share it with you anyway. So let me show you what this looks like. Aha! We have a chart here, or we have several. So this is what we call space. Actually, I talked a little bit about space in the book, but what I want to share with you is kind of some advanced stuff. So let's say that you are looking, well, that's not a good example actually, because that's a buy trade. But let me share with you, any of the Aussie pairs actually now will be a good example. So let's say that I am trading this chart here, and I've noticed this is the 6-hour Aussie CAD, and I've noticed if I look back on the chart, there isn't a whole lot of chart price action in this area down here. This big blob of nothingness over here is what we call space. So with that, why that's important is a number of reasons. Number one is if I'm looking to find an area on the chart where I think the market's going to go really quickly, then I'll look for space. Also, if I'm looking for like a trending market, or I'm expecting the market to kind of go pretty strong, I'll look for space. So that's why I'm pretty keen to sell these Aussie pairs right now. I've got several. I've got an Aussie dollar and an Aussie yen sell, and an Aussie Swiss actually. But the reason why space is so important is that typically what will happen is that if the market accelerated through an area, when it gets there again, it'll accelerate through it again. And whereas if the market's in an area where it's been chopping around, it'll typically chop around there again. And so I love trading areas with space. So for example, if the market were to get back up here above 96, there's a whole lot of space up here, because if I look to the left, let's say that the market, like the Aussie CAD, all of a sudden got up in this area around 96, 70 or whatever. I would look and I say, wow, there's nothing over there. So that's good. That's a great place to trade. But here's the tricky part when you're trading with space is people say, well, hey, Walter, if there's no support resistance there, like the market's literally never been there before. Even if I go back on my weekly charts, I don't see anything. What can you do? Well, what you can use is either a round number target. So like, let's say that I get a sell signal here on the Aussie CAD and I take it. Well, first of all, I have a really nice support level here where I could take profit at 92.20, for example. But let's say that I get a sell signal up here. Right now you can see there was a kangaroo tail, but the market never traded lower. So that's where we use our sell stop rule, and that would have stopped, probably would have been not quite stopped out, but probably will be stopped out soon if you had taken this trade without the sell stop below the low. So that's one reason to use those. Even though it reduces your reward to risk, it actually improves your overall win rate. And again, if you want to get more information, go to nakedtradingclass.com about growing your account quickly using naked Forex techniques. All right, so let's say that I get a sell signal here, and so it breaks this trend line, for example. That would be a good sell signal for me. It makes a big bearish candle like this one right here. What I would do, well, actually kind of like the New Zealand Swiss did recently. Made this big bearish candle, it broke through the trend line. Let's say it does something like that. I'll be like, yeah, I'm liking it. So then I would sell off the low of that candle, again, putting a sell stop. Put my stop loss above the swing high, which maybe would be above this candle or above another candle over here, whichever one has a higher high. And I could sell it all the way down to here, to 92.20, 92.15. But that's probably not going to give me a lot of profit. I'm probably going to end up with something along the lines of 70 pips of risk to make 80 or something like that. It's going to be about a 1-to-1. So if I want to use the space thing and say, well, look, if the market can just break this low here, there's a whole lot of space over here. It hasn't been there in a long time. I could simply use a fib extension. And this is what it would look like. Let's say again that the market peaks out over here today and gives me that sell signal. Well, I could look at the fib and go, well, it went from high to low. The market went this far. I did it backwards then. I always do them backwards. I draw my fibs backwards every single. I overthink it. And I don't use them very often, to be fair. But when I do, this is usually when. So I've got this fib, and you can see from the low down here on this kangaroo tail to the high up here on this kangaroo tail is however many pips that is. Now, so if I get a sell signal up here, so that's 169 pips. I could go for a 161 extension. So again, if I have the 75 pips of risk up here, that's 220 or 210, somewhere around there. That's a 3-to-1. So that would be acceptable to me to go for a 161 extension. So that's the way I use space. I use space to identify areas of the chart where the market's likely to move in a strong manner, which is exactly what it did right here, by the way, as you can see. And then also we can use space to identify those areas on the chart where we can use a fib extension, and we use that space area to find profit targets. So hopefully that makes sense. I hope that this helps. I hope that the naked trading class helps as well. The link is below or above this video somewhere. I wish you happy trading, and we'll see you in another video. Take care. Have a good one. Bye.